a low drawn from our old January contract lows to highs. And we were inside of pullbacks earlier this week. And this Monday, we were running into a long setup. So the VIX is so important to pay attention to. We had our Monday's lows to highs here, and it was being stick saved at a line in the sand. And every time that we ran back down into this 61.8% line, and the line in the sand again was the 1910, every time that we ran into those support levels, we put in a swing high on the indices. And so as we were going into our morning, let's look at that on the same time frame here. As we were going into our morning, we were going into the fourth day and the third day with a lower daily close. And inside of that lower daily close, we are inside of essentially a gap up situation, which leads to a sell-off back down into what we were anticipating being a pullback, not knowing what level of participation that we were going to have inside of that pullback. The VIX squeezed away from its support levels. These little white ovals here are the touches and what led us into this trend. Now, what's important to note here is what we have run into now. Now, inside of the February contract, we have run into last week's highs to lows. We have run into last week's highs to lows. And so we've run into this opposing measured move short on the VIX. Inversely, the indices have run into their last week's longs from lows. Last week's long from lows. How do we confirm if this is a support level? Or how do we confirm that it just isn't going to continue to melt down back into last week Thursday's unfilled gap? We left an unfilled gap down here at the 68.1775. Well, there's a couple of things that we can look for here in relation to our leading indicators. And first of all, we're starting off on DXY. DXY is still continuing to strengthen. As you can see here, we're just grinding higher away from our support levels. The dollar hasn't even reached really back up into any resistance. The negative correlations are coming out inside of the indices. We have negative correlations on the currencies, negative correlations on the precious metals. These support levels were creating an environment where it would, again, affect the indices, create a headwind, and create a sell-off on the indices. Are we inside of a dollar weakness trade right now? And the answer is no. And so if the dollar keeps strengthening, the indices will continue to weaken. Let's take a look at Bank. Bank has slid right out of our resistance levels that we had going into our pre-market time frame, and they have continued to melt down. We've even broken through daily extension long levels drawn from our previous highs of 2025 to highs. This is a pretty significant trend break here. We're falling right through our known support levels. Now, it is important to note here as well that last week's lows to highs also pierced its 61.8% line. Going to and through a profit target like this sends us potentially straight down in extensions. And that is also incredibly bearish for the broad markets, especially the Russell. So that is our second leading indicator. Again, telling us that there's a potential for a continuation of this weakness. And then there's the VIX. The VIX in the intraday time frame is right up against this resistance level. When we're looking at the VIX continuous contract, this stream continues at eminiaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.